Good morning, everyone. Welcome to the European crossover webinar. And today's FOMC day. We are seeing the dollar make another new low. Now, this is into our support on the bias chart, the 93.39. There is another little bit lower number. Also, we're seeing gold pretty much close to where we were a closer, just a little bit higher than we were yesterday. You can see here on the daily chart, daily here, we do have a long-legged doji from yesterday, and generally what you'll see in a long-legged doji is technically it just means that in this bar, bulls don't have on the immediate bar, not the overall market. Bulls don't have control, bears don't have control because we finished right dead center, and the longer the wick, the more pronounced that is. And generally what happens is whatever the prevailing trend has been, which has clearly been up, then we generally see a pair back. Well, because we've gone so far, 1774 potentially may seem like a bit of a stretch on the downside, but when you look much further, then you say, wow, maybe that isn't that far because the market's gotten ahead of itself. Now, it probably won't make that, if we go that route, won't make that just an immediate, but we could kind of bounce around here. And don't forget, a lot of people are expecting the Fed to be laying in the groundwork for maybe some further assistance. That may be true, but maybe a lot of this may already be priced in, so we could maybe see a run back up here, and then maybe we just end up running out of gas and we start working ourselves low, and then we kind of bounce around to eventually we see a bit of a correction. We'll see whether or not that's to take place. But once again, that's what we'd be looking at with a long-legged doji. I mean, you have to wonder how many people are going to buy at this level and how much of that is already basically priced in. So we shall see. As far as data, we did get German import prices. Those came in a bit better here on the month over month. Of course, year over year was pretty weak. French consumer confidence came in a little bit weaker than expected. And we do have, we didn't get that. I don't see that here. Retail sales, Spanish retail sales. We do have Mexican producer prices. Then some BOE data at the bottom of the hour. And then, of course, later on today, we do get FOMC. Now, before then, we will get wholesale inventories at 8:30 Eastern and pending home sales at 10 a.m. Eastern. But the bigger target will be right here, FOMC. We have seen equities come off a bit here. Yesterday was relatively quiet, and then very, very late in the day, we just saw this market drift lower. We've recovered just a little bit, but I think Monday really cleaned a lot of people out. Remember, we started out weaker, and then it was just a steady run throughout the day. Let's move this right here. And just as these people got knocked out, I think this is the one I referred to on Monday. If you look here, I'm not going to spend, stretch it out, but we had this a bit of a gravestone doji, and I said, it's been a one-way market. I wouldn't fight this. We dipped back, and then we turned around, just kept on marching higher. In Asia, they took it all the way up here, and then yesterday was just down, 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 down. And then we, in the middle of the session here, you can see here, we just weren't even moving right here. And then late in the afternoon, about the last 90 minutes, we just started dripping out of nowhere. Working a little bit higher. The big earnings releases aren't going to be till tomorrow afternoon. On Thursday, we'll have several. Let me see. I know we've got. Bear with me. I know Facebook is one of them. Google. Take a look here. Yeah, Facebook, Google, who else? Oh, Apple, Facebook, Google, Apple. It's going to be a pretty big, and Amazon. So can you imagine that? Facebook, Apple, Google, and Amazon. This can be huge. It's basically the Lollapalooza of earnings going to be released after the market on Thursday. So we'll see some pretty good swings. And I think from Monday, after a lot of people got forced out, then to see this turnaround come back, people just said, enough of this. I just won't mess around with it till then. And so we saw that materialize with this just dead area here. We weren't moving too much. And then late in the session, we saw a drip, and now we're seeing a little bit of a return. If you look at the NASDAQ on a bigger picture on a 2-hour, we're kind of just holding steady here. We've had a pretty good run. You see that? So we may end up later on just starting to weaken out. Also, a lot of stuff, even though with the they're trying to get the continuation of assistance, but looking further out, I think they've reduced what those unemployment benefits are, so we can maybe see ourselves eventually weaken further. Looking out, when I say looking out over the next couple of weeks, we may find ourselves working to a little bit lower level here. So there's a potential for that. But this market's just kind of acting weak from this area here. You can see we had almost like a little bit of on a short-term basis, a little bit of a double top. But you can see we've dropped out of this area here. We've come back, we quickly faded, and now we're just kind of stuck here. It looks like it would kind of work itself for a move down. That may start to happen next week. Could happen by the end of this week. Let's go on and move back up here to FX. And we do have a lot of work today, because today I think that as far as the analysis, I think we can see a pretty big day as far as movement. I'll hit the news real quick. Australian dollar steps back from highs after consumer price fail. The Australian dollar eased from recent highs on Wednesday after the second quarter consumer prices fell the most on record, cementing views interest rates will stay low for a long time. The Australian dollar was down 0.2 at 71.55 from a 15-month peak of 71.84 touched a week ago. Risk appetite was generally weaker on worries about the rising coronavirus cases and deaths in the U.S., dashing hopes for a quick global economic recovery. The U.S. Federal Reserve is expected to strike a dovish stance at its policy review later in the day, and dollar bettors bet it could even hint at further easing down the road. In Australia, the prospect for interest rates to remain at record lows and further strengthened after data showed the consumer price index fell 1.9% in the June quarter. This was the largest quarterly fall in 72-year history of the CPI, said Bruce Hockman. RBA left rates at an all-time low at a quarter basis point after an emergency cut in March. We think the inflation is likely to remain depressed for years to come, said Capital Economics wrote in their note to clients. That's why we think the RBA's forecast for underlying inflation to reach 1.5% by mid-2022 are too optimistic. We therefore think the bank has more to work. Across the Tasman Sea, the New Zealand dollar was flat at 66.57. And the dollar wallows near two-year low as coronavirus keeps the Fed in a bind. This is a $64,000 question. The dollar languished near two-year lows on Wednesday as the United States struggled to contain the spike in coronavirus cases, dashing hopes for a quick economic recovery. The dollar outlook for the world's largest economy is expected to see the U.S. Federal Reserve sticking to a dovish stance at its policy review later in the day. The dollar index against six major currencies stood at 93.72. The euro traded, of course, that is a whole lot lower, near its lowest in, because we're at our lows at 93.39, or were. The weakness stemmed from, let me see, we're at 90, we actually bounced a little bit. We're 93.48 right now. The dollar changed hands at 105.05 yen. Its weakness stemmed from an eroding perception of the U.S. economic growth could be stronger than the rest of the developed world, and the investors could count on higher returns in the dollar. Another thing is also as the dollar continues to weaken, this may also weaken the hand for equities. Usually you see this as a positive, but going forward at these high levels, how much money would actually moving into U.S. equities? You would think, that would be an expectation for less and less going forward. And sorry about that, guys. I actually had my mic on off. So let's just go on and recover on this. As I mentioned, the dollar near 2-year lows. Coronavirus keeps Fed in a bind. And just getting back on this, we're talking about how the Fed is sticking to its dovish stance, and they're expecting for some potential groundwork for further easing. Said investors will be watching for an indication that U.S. Central Bank will increase in purchases of longer-dated debt. Goldman Sachs on Tuesday noted that the potential Fed shift towards an inflationary bias, along with record high debt levels by the U.S., are raising real concerns about the longevity of the dollar as a reserve currency. So I guess that is garnering a little bit of news here. The Fed's balance sheets have swelled to about $3 trillion to as high as $7.17 trillion, much faster than those of the other central banks and corporates around the world who sought dollar liquidity to survive lockdowns through the tally. So so this could, going forward, is probably going to be something that's going to weigh on the dollar. We did talk about one of the things I was just mentioning now, and I'll swing back to that. I'm going to have the mic on off. Is when we're looking here at the moves that we've had, one of the concerns I have here is that with the dollar continuing to be in a weakened state, we can end up seeing these equities fall because it's, if you look at it, we're way up here in the stratosphere. So with the dollar so weak, you have to think there's not going to be many people. I wouldn't say many people, but I'm just saying you're not going to have foreign money coming in, because as the dollar continues to weaken, they're losing whatever gains they're getting. They're losing in the currency change. So you could end up losing that opportunity for foreigners to come in and buy U.S. equities. It wouldn't make much sense. So ultimately, we can end up seeing ourselves work lower going forward. And one of the things I mentioned when I had the audio or the mic on mute was that we are, they're still working out the issues with the continued benefits, unemployment benefits. That's something that really helped the market and really took off higher. Well, with these reduced levels and more further concerns, you have to wonder how much longer we'll stay at this area. And we may, we popped up here in the NASDAQ and took another dip, and we're just basically hanging on right now. And we may just end up finding ourselves starting to, looking forward to the next couple weeks, start to stretch a leg down here. And I would think ultimately challenge down here around this 9,400. That's a pretty good long ways to go from there. Moving on back here, we talked about gold earlier, and the close that we had yesterday, which is long-legged Doji, and potentially, like I said, how much is this priced in? We'll have to go and see. Obviously, the dollar was under some pressure. We did make it to 93.39, which is our bias chart support from yesterday, and is also going to be today, but we do have a secondary level. And we'll just touch on this real quickly before we jump into the analysis. King dollar's decline ripples across the globe. An accelerating decline of the U.S. dollar is reverberating around the world, adding fuel to a global momentum rally that's boosted prices for everything from technology stocks to gold. The dollar, which measures the greenback against 6 other major currencies, is down around 9% from its March highs, and is on track for its worst month since 2011, pressured in part by expectations that the United States will take a bigger hit to growth and other economies from the coronavirus pandemic. Because of the dollar's central role in the global economy, a sustained sell-off in the greenback could buoy a bond market rally driven by expectations of a continued economic stimulus from the world's central banks and governments. At the same time, further dollar weakness would likely be an unwelcome development for economies such as Europe and Japan, as they own rising currencies that would threaten to weigh on the growth and efforts to spark inflation. The weak dollar is almost becoming a self-fulfilling prophecy, with gains for risk assets seeing the dollars weaken further, fueling additional gains, said Michael Brown. The dollar is around 3% year to date after rising for each of the last 2 years. The weaker dollar makes the U.S. exports more competitive abroad and helps U.S. multinational companies by making it cheaper for them to convert profits back into their home currency. That's potentially good news for a rally in U.S. stocks that has slowed in recent weeks after coming within distance of all-time highs. But don't forget, we're seeing this falling dollar, yet we haven't seen these equities. They've moved higher, but they're not pushing even further. And once again, I think that may be starting to go away. We'll go and see how it is that we look at going further out. But anyway, with that, we shall go on and move into the analysis. So let's go and take a look here with the euro. So the euro retained its overall bid ahead of the FOMC Wednesday. Resistance will be 18.14 with support at 16.57, followed by 16.12. So we could end up seeing a good little swing here. We shall see whether or not that plays out. So we're looking for, on the upside, 18.14. And on the downside, 16.57, followed by 16.12. And onto the cable. Cable closed pre-FOMC above the bias chart resistance at 29.23. Resistance will be 29.75, followed by 130. With support will be 28.56, followed by 28.12. So we have we're expecting some pretty good volatility today. So we'll be having these dual levels for support and resistance. So Aussie finished at a new closing high ahead of the FOMC. You can see that right here on this bar. Actually, we're even continue to add on to these gains. Holy smokes. Um, Resistance will be 72, followed by 72.52. Support will be 70.70, followed by 70.26. And support will be 70.70, followed by 70.26. So the Aussie, the Kiwi closed slightly lower ahead of the FOMC. You can see that right here, with a medium-legged doji testing the highs and lows of the prior session. You can see that here. We took those out on both sides. Upside resistance will be 67.35 with support at 66.01, followed by 65.69. So 67.35. So the dollar CAD continues to hold the fort above 133 with support at 33.40. A break lower will test support at 32.75 with resistance at 34.36, followed by 34.81. So right now, 33.40 in place, followed by 32.75 with resistance at 34.36. Followed by 3041. Onto the dollar peso. So the dollar peso finished Tuesday's session on its lows. Support will be 21.62 with resistance at 22.35. Onto the dollar yen. So the dollar yen finished Tuesday with another good slide. The pair seems destined to challenge 452 with additional support at 408. Resistance will be 562 followed by 592. So once again, we'll see what kind of volatility we do see, but we're looking for the test of 452. Followed by 408. And on the upside, 562. Followed by 92. Now, the key thing on these levels, because we were expecting some good volatility post FOMC, is if we do see some type of reversal or an extended move, at least you know what we're looking at for secondary resistance or secondary support. Because like I said, we could see a pretty good swing. We don't want to be caught flat-footed, so we'll be looking at resistance, initial resistance, and then secondary resistance. Also, obviously, the same thing with support. Let's go on now, moving to the cash dollar index. So the dollar index looks like a haggard dog on its way home. Support will be 93.39 followed by 93.17. You can see we did tag 93.39 earlier. Resistance will be 94.35 followed by 94.61. That seems an awful long ways away, but 93.39, we already had that, followed by 17. And resistance 94.35 followed by 94.61. On to the cross rates. Well, we have gone and taken this dip down to 69.90. We are hanging around these lows, but as far as additional support that we can potentially go and see, potentially we could have come down here, which would be 69.59. We're just a hair lower, which would put us 69.50. Upside, it's going to be 70.25. And let's go move into the euro yen. We're at 24.01. We're still holding up relatively well here, but Resistance at this point is going to be right there, 23.62. And we have gone and pared back a decent amount here. We're going to be looking for support potentially right here, 22.78. Euro is still down in the dumps here. And we're actually going to look for support right there, 63.08. Resistance. $64.33. And let's go move on to the Euro Kiwi. We have made it past and made right up here to the 76.24. We're hovering right there, just a little bit higher, and that's going to be this close here, which would be 76.76. And we're actually going to go and move into the 2-hour for some support. Right there. Right there. 75.71. And onto the ASEAN. Hold up relatively tight here in the ASEAN. Support will just be a little bit lower, pulling us down here to 74.72, which we're actually right there, 74.70. So we're going to keep that. The only difference is that the high is going to be right here at 75.97. And on to the guppy. Looking at resistance here, it's going to be right there at 36.47. And then support right here, 34.91. And finishing up things here with the sterling nod. Obviously, you've seen some pretty good strength here, and resistance for today is going to be right there at 80.78. And support coming in right there at 80.03. Well, there's the bias chart here. We've got the FX squared away. I'll go and get the bias chart posted and keep an eye on gold. And obviously, with the dollar index so weak, we'll have to see how that plays out. We are at 93.50 off those lows at 93.39, which was our bias chart support. And potentially the euro, we're looking potentially for a move to 18.14. So with that, thanks for joining us here on the European crossover webinar. We'll see you in the chat room.